You've heard 1,000 tips on money. Save more, spend less, invest early. But what if I told you that after reading over 50 of the most popular finance books, only few principles actually matter? The rest is the noise. In this video, I'm going to break down the 10 money rules that kept showing up. And if you're serious about building long-term wealth, pay attention, because people who get rich follow these rules like religion. Let's go. So if you think that being smart with money means having high IQ, that's the first myth that we are going to break. Rule number 1. Intelligence isn't wealth. Your choices are. Books like Psychology of Money and Rich Dad Poor Dad are making this point clear. Smart people stay broke all the time because wealth isn't about intelligence, it's about behavior. You don't need a finance degree. You need discipline and consistency. The rich aren't the ones who made the smartest guesses. They are the ones who build systems and habits around acquiring assets. This is exactly what Housel says. Doing well with money has little to do with how smart you are and a lot to do with how you behave. So if you are obsessing over timing and the perfect investment while ignoring your spending habits and risk tolerance, you are already behind. Rule number 2. Patience pays. Most people can't handle it. Warren Buffett once said that stock market is a device for transferring money from the impatient people to the patient ones. That's not just a clever quote, it's the core truth behind every millionaire portfolio. The problem is that most people say they are long-term investors until there's a crash. In Atomic Habits, James Clear talks about power of compounding small actions over time. That same principle applies to investing. If you held the S&P 500 for any 20-year period since 1920s, your chances of losing money were almost zero. But the average investor still sells in panic almost every crash. Remember, discipline beats genius. Time beats timing. If you are not playing a 10 to 30-year game, you are playing to lose. And if you would like to know how I evaluate companies and what's my process of investing, you can check out my ebook, first link in the description, or you can scan this QR code. The third rule: don't invest in anything you don't understand. Peter Lynch managed one of the most successful funds of all time. His rule: know what you own and know why you own it. Yet most investors chase stocks based on TikTok hype or Reddit forums. In the book One Up on Wall Street, Lynch makes it clear: if you don't understand how a company makes money, you don't belong in its stock. Every dollar you invest should be a vote of confidence in a business model that you believe in. Rule number 4. Motivation is a spark. Systems build the fire. Atomic Habits and The Slight Edge both say the same thing. Motivation fades, systems stick. Everyone's excited on January the 1st. Almost no one's consistent by March. So if you want to get wealthy, automate your savings, schedule your investing, budget monthly without fail. In other words, don't rely only on willpower. Rely on structure. Use tools like YNAB or Mint. Remove friction from good financial behavior. Your system is your safety net when your motivation crashes. And our next point states that your biggest enemy isn't inflation, taxes, or the market. It's comfort. Rule number 5. Comfort is the silent killer of wealth. Napoleon Hill, in the book Think and Grow Rich, makes this brutal point. Most people quit in the moment when their life feels fine. Comfort gives you the feeling that you don't need to start that business, take that risk, or invest that extra $500. But the truth is that every wealthy person had to get uncomfortable first. They made sacrifices, took risks. So if you want to be wealthy, get used to being uncomfortable or get used to staying average. Rule number 6. The market doesn't care about your opinion. Hype doesn't equal value. Stocks rise and fall not because of your hopes, but because of earnings, fundamentals, and sentiment. Books like The Intelligent Investor reminds us that the market is a voting machine in the short term, but a weighing machine in the long term. So don't invest based on vibes, invest based on value. Avoid following the herd, stay focused on real businesses with strong balance sheets and long-term prospects. If you can't explain why you are holding something without mentioning FOMO or it's going to the moon, my recommendation is buy my ebook. Rule number 7. Wealth grows with leverage, not the hustle alone. Naval Ravikant said it best. You are not going to get rich renting out your time. Leverage is how wealth accelerates. There are 4 kinds of leverage: capital, using money to make money; people, building teams; code, software and automation; and content, media and brand. If you are still trading time for money with no leverage, you have built yourself a trap. Start creating things that you can easily scale. That's how the rich get richer without burning out. Let's talk about something that's rarely mentioned in finance books but impacts your money more than any strategy. Rule number 8. Your environment predicts your financial future. Jim Rohn famously said that you are the average of the 5 people you spend the most time with, but it's more than just friends. It's your social media, your podcasts, and your YouTube feed. So if you are constantly absorbing low-quality content, you are wiring your brain for short-term thinking. So you need to surround yourself physically and digitally with people and ideas that challenge you to grow. Find a good group of friends that will challenge you and support when you need it. Subscribe to real financial educators. Environment beats willpower every time. Without this next principle, all your hustle, strategy, and investing will go nowhere. Rule number 9. Vague goals equals vague results. Napoleon Hill called it definiteness of purpose. For example, if you say, I want to be rich, that's just a wish. But if you say, I want to earn $10,000 per month in passive income by the age of 40, now you can reverse engineer it. Remember, goals must be specific, time-bound, and emotionally charged. You can write them down and track them monthly. The clearer your aim will be described, the better your result. And if you think that the money is the end goal, the last rule might just save you from the burnout. Rule number 10. Money is the tool, freedom is the goal. The psychology of money teaches us that money doesn't change your values, it amplifies them. If you are stressed or unhappy right now, money won't fix it. It will just make those feelings louder. So use money to buy time, use it to build autonomy, and use it to live life on your terms. Don't chase status, chase freedom. If these 10 rules were valuable to you, don't just watch and forget, apply them. Every wealthy person that you admire didn't get there by luck. They built habits that compound. Start small, stay consistent, and protect your progress like it's your most valuable asset. Because real wealth isn't built in a week, it's built in your daily decisions. You don't need 50 books or the perfect market timing. You just need the right principles and the discipline to follow them. Do that and your future won't just improve, it will transform. And if you enjoyed this video, watch this one next.